Ladies and gentlemen, good day and welcome to Sahasra Electronic Solutions Limited H2FY26 and FY26 earnings conference call hosted by Atlas Capital. We have with us management today represented by Mr. Amrit Manwani, Chairman and Managing Director, Mr. Varun Manwani, Non-Executive Director, Mr. Manish Tiwari, Chief Financial Officer, and Mr. Rutul Shah from Atlas Capital, company's investor relations advisor. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation continues. Please note that this conference is being recorded. I will now hand over the floor to Mr. Amrit Manwani for his opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Swapnil. Good afternoon, ladies and gentlemen. I wish to thank you, first of all, for joining the Sahasra Electronic Solutions H2 results for FY26 as well as the full year 26, the total earnings, and joining this conference call. The last year has been a very important year for us as we continue to strengthen our position in the verticals that we are present in, which is electronic manufacturing, semiconductor packaging, and a couple of technology solutions, including memories. During the year, we had a significant growth. Our revenue growth went up to 123 crores, which was a jump of about 42%. Our operating profit went up to 18.8 crores, which was about 93% over the last year. And our EBITDA margin also went up by about 15%. Profit after tax profit before tax was 19.7 crores, and the profit after tax was, I think, 15 crores. So this has been a healthy growth. During the year, we expanded our customer base, strengthened our domestic market presence. So overall, we have had progress in all the verticals that we operate in. One of the key developments during the year was continued strengthening of our domestic business franchise, which helped diversify our revenue mix. Because previously we were more focused on exports, but in the last year we expanded our customer base to domestic, and therefore the revenue mix was both domestic and exports was almost equal, and therefore we were able to make increase in the revenue. Also during this year, we received a capital subsidy for our subsidiary company of semiconductors to the extent of 22 crores that came in the last quarter of this financial year. While certain strategic initiatives progressed at a slower pace than originally anticipated, that was mainly due to customer qualification. They take time, particularly the domestic customers. Also the commercialization cycles, because some of the customers, after qualification, they took some time in ramping up commercial production. However, the overall direction of the business remains encouraging, and we continue to see significant opportunities emerging across India's electronic and semiconductor landscape. With those remarks, I would like to also, as Swapnil has already said, I'm being joined by Varun Manwani, who's the director of the company, also Mr. Manish Tiwari, Chief Financial Officer, and last but not the least, Mr. Rutul Shah, who is our investor relations advisor from Atlas Capital. With that, I would like to hand over to Varun to give a detailed business update to all of you. Thank you.
Thank you, Mr. Chairman. So good afternoon to everyone joining us on this call. The FY26, as our chairman summarized, was a good year for us. So if I were to summarize it from a business standpoint, FY26 can be summarized in three key areas. One is the scaling of our EMS business. The second is strengthening our domestic market presence. And the third is advancing our initiatives within the semiconductor domain. So if I start with the MS, the business continued to witness healthy momentum during the entire year. We expanded customer relationships across several product categories, such as IoT electronics, industrial electronics, metering solutions, EV-related products, and other high-growth segments. The demand remained encouraging from both existing as well as new customers who we added into our customer portfolio. And this is primarily supported by the broader trend of electronics manufacturing localization in India, and also adoption of more and more electronic products across the world. Alongside business development efforts, we continued to invest in our manufacturing infrastructure and our operational capabilities. Our focus remained on improving capacity utilization, enhancing quality systems, optimizing our supply chains. Although the second half of the year saw a lot of tough supply chain challenges, but still we were able to mitigate these challenges, and we were somehow able to deliver products and solutions in a much faster turnaround time for our customers. So these initiatives supported stronger execution and improved customer engagement throughout the year. A significant strategic achievement during the financial year 2026 was the continued diversification of our revenue base. Again, as our chairman mentioned, that we had good growth in almost all areas of our operations. So historically, the company had a relatively high dependence on export revenues. But as I had shared in previous calls during the previous quarters, that we are also pivoting a lot towards the domestic market. And so over the last year, we've been able to successfully strengthen our domestic customer portfolio, resulting in a more balanced revenue mix and improved business visibility. This is at a time when the export market was heavily challenged due to various factors. The prime factor being the tariffs that were imposed on India as a country and the entire electronics space. However, again, as I said, due to mitigation from the domestic market, our order pipeline, even for this fiscal, continues to remain healthy, both from a domestic and export standpoint, which shows that we have mitigated risk with respect to dependence on only the export market, which was our largest driver, until FY 2025. So as of March 31, 2026, we have a executable order book that stands at approximately 68.5 crores, which provides visibility for us in the coming quarters. We continue to see a strong inquiry activity as well as improved conversion rates across multiple industry verticals. And we see a lot of growth actually in our semiconductor business. The demand for memory, primarily due to the shortages in the AI segment, drove a lot of customers to look at alternate sources. And considering that India has a very strong neutral position in the world order as of today, and we being one of the very few companies that could offer memory solutions and packaged memory solutions, we benefited from this AI boom. And therefore, FY26 represented a very important year for us in our journey of building long-term capabilities in the memory packaging segment. While the semiconductor business remains in an investment phase because we still have to develop capacity as our volumes are growing. We've achieved meaningful progress across operational execution, customer qualification programs, which were in place right since end of 2025. And therefore, we've reaped the benefits of those seeds that we had sown, and also the technology development initiatives that we put in place. So, as you will see through the numbers, that very importantly, our EBITDA losses in this segment reduced significantly during the year, which reflects in the improved operational efficiencies and increasing scale of operations. We are also continuing our progress in our memory-related initiatives for increasing our customer base within the export market, because we're seeing a lot of traction from the US and European customers in the European countries, as well as across the US. So there are the commercial timelines for several projects which have been longer than initially expected. Some of them have fructified, but a lot of others which we had expected to qualify are now in the qualification stages. And hopefully our customers will be able to adopt products supplied from us in the near few weeks and quarters. So we've successfully achieved several important operational milestones during the year, and we remain very optimistic about the long-term opportunity within the memory space, especially in the consumer memory space, where we have a large play, because a lot of big companies focusing on the enterprise and industrial space has left a void within the consumer space, which we are definitely taking advantage of. But it also gives us room to be able to participate within the industry segment, graduating from the consumer space in the next several quarters, which will bolster our margins in the time to come. So based on the current visibility and operating trajectory, we continue to target EBITDA breakeven in the semiconductor business by FY27 end. Within our memory solutions business, as I stated, that we witnessed improving demand conditions as well as a diversified portfolio, so that we de-risk ourselves from some of the key customers. And therefore, across Europe, we are seeing a lot of demand, and therefore our export basket is extremely healthy as of today, and we are able to penetrate various markets and various countries within Europe. So we believe this increasing focus on our indigenous technology solutions and data infrastructure presents attractive long-term opportunities for this segment. And we will be able to take benefit of this. As a rough metric, we were able to exceed export business turnover from our semiconductor operation in the excess of 60 to 62%. And that led to higher profitability, also better cash conversion cycles. So while this period was a difficult period in being able to get access to raw materials like the wafer, but at the same time we were also hit with the price increase at the back end. But we were lucky enough to be able to pass on the same price increases to our customers in this extremely shortage-driven market, and therefore be able to grow our business. Looking ahead, we remain focused on expanding our manufacturing footprint in line with the demand from our customers. Our long-term objective is to scale our SMT infrastructure. Although slightly delayed, but we were able to install the two new SMT lines that we had spoken about earlier. So while they were supposed to come in by March 2026, but late last month, towards April of 2026, we got the two new SMT lines, and earlier this month, the team was able to install and operationalize these two new SMT lines. So the objective will be to scale our SMT infrastructure towards the 10 lines capability that we have over the next several months and quarters, enabling us to support larger customer programs, not only for our EMS business, but across our IT hardware business as well. Overall, we believe Sahasra as a company is well positioned to benefit from the structural growth opportunities emerging across India's electronics manufacturing and semiconductor ecosystem. And our focus will remain on profitable growth, customer diversification, operational excellence, and long-term value creation. So these are remarks from my side, and I would now therefore like to hand over the call to my colleague and our CFO, Mr. Manish Tiwari, who will provide more insights into our financial performance. Thank you.
Yeah, thank you, Varun sir. Good afternoon, everyone. I will now take you through the financial performance of the company for FY26 and H2FY26. For FY26, the company reported consolidated revenue of approximately 138 crores compared to 95 crores in FY25. It is representing a year-on-year growth of approximately 45%. The growth was primarily driven by stronger execution within the EMS business, increasing domestic customer contribution, improving demand in memory solutions, and continued expansion of our manufacturing facilities capabilities. For H2FY26, consolidated revenue stood at around 78.1 crores compared to rupees 49.5 crores during the H2FY25. It is reflecting a significant improvement in business momentum during the second half of the year. From a segment perspective, EMS remained the largest contributor to overall revenue during FY26, accounting for approximately 66% of the total revenue. Memory solutions contributed around 18.9%, while IT and hardware solutions contributed around 3.8%. The semiconductor business contributed approximately 11.3% and continued progressive towards operational scale. One of the notable developments during FY26 was the diversification of our revenue mix. The company significantly increased its domestic business contribution through focused customer acquisition efforts and participation across IoT electronics, industrial electronics, EV accessories, instrumentation, GPS tracking devices, and metering applications. This helped reduce concentration risk and strengthen revenue visibility. On the profitability front, EBITDA for FY26 stood at approximately 18.2 crores compared to 7.5 crores in FY25. EBITDA margins improved to approximately 13.1% compared to 7.9% in the previous year. The margin improvement was supported by better operating leverages, higher capacity utilization, improved product mix, stronger domestic contribution, and ongoing cost optimization initiative. For H2FY26, EBITDA stood at approximately 7.6 crores compared to negative 0.6 crores in H2FY25, while EBITDA margins improved from around minus 1.1% to 9.7%, which is reflecting the benefit of scale and stronger execution. Profit after tax for FY26 stood around rupees 12.1 crores compared to negative minus 2.3 crores in FY25. PAT margin also improved during the year, supported by stronger operating performance and improved business efficiencies. From a balance sheet perspective, the company remains competitively positioned to support future growth. As of March 31st, 2026, consolidated assets stood at 377.1 crores. The company continues to maintain a prudent financial profile while investing in manufacturing expansions, technology development, and capability enhancement. The semiconductor incentive of rupees 21.8 crores supports received during the year further strengthen our financial positions and provide additional flexibility for long-term growth investments. Overall, FY26 was a year of stronger execution, improving profitability, domestic diversification, and continued capability expansions. We believe the foundations being built today position the company well for sustainable growth over the coming years. With that, I would like to hand the call back to our chairman, Mr. Amrit Manwani.
Thank you, Manish. Before we move on to the Q&A session, I would like to just share the brief outlook for the company. Despite the geopolitical uncertainties that prevail, we think that we will fine-tune our business forecasts, which are more realistic. We all know that the last year was really a troublesome year in terms of whatever happened globally. Recognizing all these global challenges that are there, we would like to share the forecasting approach and remain committed to providing realistic and responsible guidance to our stakeholders. As we look ahead, our priorities are very clear, considering the fact that there is a strong government support for the electronic sector, particularly through the various incentive schemes, and also the government push towards Make in India approach. We see a significant growth opportunity for the company. The government is shortly going to announce India Semiconductor Mission ISM 2.0 scheme. We will certainly participate in that in our semiconductor business. We also are committed to very closely monitor, as Varun also said, our supply chain management, particularly for raw materials like wafers and semiconductors, and also for our EMS business. We will fine-tune our supply chain management with a very clear focus. We will improve profitability through higher capacity utilization. We will continue to look at business partnerships or to increase our revenue both domestically as well as in the global markets. With that, I would say that it appears that after the merger, we plan for a merger together with a non-listed company, so together with that, we seem set for our goal to achieve a revenue of about 275 to 300 crores for the merged entity, and with a reasonably strong profit margin of about 15%. We will take a disciplined approach towards our balance sheet. We will wait and watch when do we incur capital expenditure towards enhancing capacity, so that we are going hand in hand with production growth, the demand growth, as well as maintaining our cash flow. With that, I would once again like to say that the outlook is very positive. Your company has, whatever happened in the previous year, that is 24-25, it was able to quickly recover in 25-26. And as we enter into 26-27, we would want to serve all the stakeholders with positive returns. I would like to take this opportunity to thank all our shareholders, customers, all our employees, partners, and all the stakeholders like the banks, etc. And of course, the government for their trust and support in Sahasra. Thank you very much. I would now like to open the floor for any questions that the audience have. Thank you.
Thank you so much. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may click on the raise hand icon from the participants tab on your screen. We request participants to restrict to 2 questions and then return to the queue for more questions. To rejoin the queue, you may click on the raise hand icon again. We'll wait for a few minutes until the question queue assembles. We'll take our first question from Deepak Poddar of Sapphire Capital. Deepak, please go ahead.
Yeah, I'm audible.
Yes, we can hear you.
Yeah, okay. Thank you very much for the lovely presentation, sir. So my queries is first on margins. I mean, you mentioned a strong profit margin of 15%. You're talking about EBITDA margin?
You were not very clear towards the end. Can you repeat the last portion about profit margin?
Yeah. So when you're talking about profit margin, you're talking about EBITDA margin?
Can you please repeat? Yeah, the last word was not very clear.
So when you're talking about profit margins, you're talking about EBITDA margins or PAT margins?
No, we are talking about PBT margins of 15%.
Okay. And when we say this year we look to have 275 to 300 crores kind of a revenue, right? So would it be possible to give you the breakup? I mean, how much will be coming from semiconductor, how much from your base business, and how much from this unlisted the merger that we are into it?
Varun, would you like to answer?
Yeah, I would like to answer that. So if we look at the listed entity, your company, the entire listed entity, so we will be looking to target around about 160 crores from SCSL, which is the listed entity. We are targeting approximately 50 crores from the semiconductor entity. So that takes us to about 215 crores. And then from the unlisted entity, we are looking to target the rest. So let's say about 85 to 90 crores, which takes us in the range of 300 crores, as has been mentioned by Chairman.
And we look for break even in semiconductor business, right, this year?
Yes, that is correct.
Okay. And I'm not sure about the merger. I mean, has it been completed or we are planning to complete? I mean, what is the status of merger?
Well, the merger application has been filed with NSE, and it's very difficult to forecast how much time would it take, because the process is first NSE has to give the clearance, then it goes to SEBI, and then it goes to NCLT. So this whole exercise takes time. However, we are hoping that the merger would be in place by end of financial year or earlier.
By FY27 end?
Yes.
So then you'll be able to consolidate that number. I mean, it will come in FY27. I mean, because you have factored in.
It will be, as per the proposal that we have submitted to the government, it will be effective April 1, 2026. So if the merger is approved, the FY27 results would be consolidated of all the merged entities.
Okay. And just one last small thing. What is the margins in the unlisted entity?
Similar as they are in the listed company, because both are in similar business.
Okay. Understood. That would be it from my side. Wish you all. Thank you so much.
Thank you.
Thank you so much. We'll take our next question from Paras Chheda of Purple Vortex Ventures. Paras, you can go ahead now.
Yeah. Thank you, sir, so much for this opportunity, and congratulations for the commencement of the operations also at semiconductor facility. Sir, on a steady state basis, what kind of profit margin should we expect, PAT margin on the semiconductor business, sir? Or EBITDA margin?
Varun, would you like to answer that, or do you want me to?
Yeah, if you could answer that, I will chime in after you mention a few things.
Okay, so as my other colleagues mentioned that this year we are targeting a revenue of about 50 crores, and if we have this revenue of 50 crores, we are hoping that we would be able to avoid any loss. So we will reach a break even at 50 crores. Now, maybe certain portion of it, particularly the depreciation portion, we may not be able to cover. However, there will be no cash loss for sure if we reach the projected turnover of 50 crores.
Okay, so
and just to let you know that both for April and May, if we look at those figures, we are on course to achieve that revenue of 50 crores.
Understood, sir. So there may be a possibility of book loss maybe on semiconductor, but cash break even should be there, is what the point is.
Yes, yes.
Understood, sir. Sir, I mean, and next year onwards, when we are well above the break even, figure for the semiconductor business, what kind of EBITDA or profit margin should we assume as a stable state business?
For the total, from a consolidated viewpoint, our PAT should be at about 15%. Now, once semiconductors goes positive and it starts to generate profits, I think we would maintain about 16 to 17% as PAT margin.
Okay, this is on the semiconductor business or the entire consolidated entity, including
entire consolidated. The semiconductor business would, as I said, at 50 crores, it will kind of have break even. In the future year, that is 27-28, we are looking at a revenue only for semiconductors at about 150 crores. And if that happens, then we will have a 10% PAT on semiconductors, but overall we will have a 16 to 17% PAT for the group.
And this 15% includes the unlisted private entity also. When we say that, the overall merged entity, that also, is included in the 15% PAT margin assumption then.
Yes, yes.
Understood, sir. And so just the second question, what would be the peak, like on the semiconductor, I guess the peak revenue would be about 250 odd crores is what my understanding is, and correct me if I'm wrong. And what would be the peak revenue on the EMS business, the current capacity?
Oh, okay. Let me comment on your assumption. As I said, we would definitely be participating in the ISM 2.0 scheme, which the government is due to announce in the next couple of months, definitely before the Semicon, which happens in September. We would participate in that. And thanks to the Rajasthan government also, who has come out with a very good semiconductor policy, encouraging semiconductor investment in the state. So with that, we would be doing more investment. And with that, the peak is not 250 crores. It would be definitely much higher. So we are looking at the next 4 to 5 years reaching a figure of anywhere between 600 to 650 crores.
With the current capacity only on the semiconductor unit or on the consolidated entity, you mean to say?
So with the current capacity at the semiconductor unit, maybe add on of few Delta equipment to scale certain areas, we can do 250 crores based on, as I said, with the current capacity.
Right. And the overall, along with the EMS as well as the private entity put together, about 650 to 700 crores in the next 3 to 5 years.
Yes. Yes, definitely.
Understood, sir. I'll come back again.
Thank you.
Thank you. We request participants that they can click on the raise hand icon from the participants tab on the screen. We'll wait until the question queue assembles. We'll take our next question from Shivam Kapoor. Mr. Kapoor, please unmute your microphone. Yes, please go ahead.
Hello,
Mr. Kapoor,
can you hear me?
yes, we can hear you. Please go ahead.
So my question is with the chairman, sir. I would like to know the future prospects of the whole entity and the risk concerning to it, please.
So that's a very good question. As we, looking in the crystal ball, overall, the government of India is looking at a 400 to 500 billion dollars, demand for the country in electronics. That's significantly, at least 4x from what it is today. So if we were to look at it from that point of view, we could also look at definitely more than 4x. We are in a, I would say, a sweet spot in terms of technology. We have the verticals of PCB assembly, EMS, semiconductors, memory solutions. So we could look at over the next 3 to 4 years, as one of the previous investors also made a remarks, definitely 750 crores or upwards of that.
Yeah, and can I address the question on the risks? So, as our chairman said, that nobody has a crystal ball, but look, the global market is currently, as we speak, still going through a lot of risks. Unfortunately, the war in the Middle East has its repercussions. At the same time, we have to also decide internally whether one chases only growth or one chases profitability. And in general, in our DNA, we tend to chase profitability. Therefore, that sometimes becomes an impediment. But these are the only risks that we see. The global turmoil due to the Middle East challenges, or China being a spoilsport in supply of certain key materials sometimes becomes a challenge. But then these challenges are not specific to us only; they are across the industry. So, other than this, I think the outlook in general is positive. Your company will strive to work around these challenges to maintain the current position.
Okay. Thank you, sir. So my next question is, if I'm not wrong, if I understand the company good, so what verticals we cover and what market share we cover in those verticals, like semiconductor, SD, memory cards, and all of this? If you can just let me know, like.
So there are, with the consolidated entity, there are 4 verticals that we are kind of addressing. One is the EMS industry on the whole. The second is the memory product solutions that we have. The third is our semiconductor packaging, which is primarily feeding the memory portfolio, which is the SD cards and the USB drives. And the fourth is IT hardware. The EMS continues to drive majority of the business. And the memory products, which as such may fall within the EMS, but because we provide complete products and solutions to customers, that's a different vertical for us. The third is the semiconductor, and fourth is the IT hardware. Now, in the EMS business, we serve a very diverse group of industries. We primarily work in the industrial electronics space. We work in IoT electronics. We work in consumer electronics, healthcare, IT and telecommunication, defense, and also a little bit in automotive. There are various there are varying percentages to all these product categories. But overall, the EMS business, along with the memory products, contributes to about, let's say, about 90% of the revenue, 85 to 90% of the revenue. The IT hardware business last year was a bit low for us because after the engagement that we had with one of the European brands, which did not take off, unfortunately, we have last year been, looking at increasing our share in that particular industry. And so this year we are positive in terms of tying up with other brands and being able to increase that business to anywhere between 5 to 7%. And lastly, the semiconductor memory business currently contributes to about, let's say, about 10 to 11%. And as we grow that business, and we've already spoken about increasing it to 50 crores, in a total of 215 crores that we are looking at with our listed entity and the semiconductor entity put together, that will represent approximately 22 to 25%. So I hope that answers your questions.
Yes, sir. Just one more question, sir. The deal with the Europe company is cancelled or it is delayed only?
So the deal with the European company is cancelled because they were not able to sustain themselves in the market, and so largely they have exited the market. However, and this is something which we had already shared with the stock exchange as well. However, as I said, we've been pursuing other opportunities, and we have signed up with another company and brand. Announcements around that will be made shortly once the business begins. And so we are exploring many other such engagements within the IT hardware space as well.
Thank you, sir. Thank you. That's from my side, sir. Thank you so much. Good luck.
Thank you.
Thank you. We are taking a next question from Ankur Gulati of Genuity Capital. Ankur, you can go ahead with your question now.
Hi, am I audible?
Yes, please.
Thanks. Can you just walk us a bit more granular on business development initiatives across 3, 4 verticals, especially on the client ramp-ups and so on?
Sorry, management team, were we able to hear the question clearly?
The second part of the question I was not able to hear.
Ankur, would you like to rephrase that question, please, one more time?
You can give us more granular details, not the client names, but how is the ramp-up of clients across 3 verticals or 3 companies going to happen, and what kind of capacities do we have today to cater to whatever will for 2 years?
Okay. I'll answer the second part of the question first. So, as I mentioned during my initial remarks, at the end of April, with the 2 new lines getting installed, we have a total of 12 SMT lines as of today. We have a total of 8 SMT lines as of today. 4 SMT lines are at the Bhiwadi facility, and 4 SMT lines are at the facility in Noida. Now, as of today, with these lines, we have enough of capacity in place to be able to reach the numbers that we have given projection and guidance on. The Noida facility is approximately operating at about 80% utilization. However, the Bhiwadi facility is in the range of 20%, and this is with the 4 lines that we have. So the infrastructure is already built and ready, and therefore, if we see the business scaling up, it's primarily plug and play. Therefore, we have to bring in additional SMT lines, and we'll be able to immediately cater to the growth in business. Coming to the former part of the question in terms of business development initiatives. So if you look at a semiconductor packaging in the memory space, we have dedicated sales and marketing teams in place which are focusing on this segment. We are currently catering, as I said, to the consumer space within the micro SD and USB product categories. We have signed up distribution agreements and distributors across several countries. So we have today distributors in Nepal, in Germany. We are just about signing someone in the US, and we definitely have our own salespeople across India. When we talk about our EMS operations, which includes our IT hardware and memory products, which includes the DDR memory modules and SSD drives. Again, we have dedicated business development and pre-sales teams, both targeting the exports as well as the domestic market. And because we serve a wide variety of markets, as I mentioned to the previous gentleman who asked the questions, we cater to a lot of wide markets of customers. And therefore, we have dedicated people who have experience within that particular space. So whether it be the EV market, it be the automotive space, it be IoT electronics, medical, defense, we have business development people who are working in these areas. And as far as our exports go, we have our offices in the US, two on the East Coast, one which we've developed on the West Coast. We also have offices in Europe. So the business development teams at these locations are scouting for business. Other than that, we are participating in trade shows through LinkedIn, etc. So these are the various business development initiatives that we take upon to be able to bring in business to the entity.
Varun, sorry, apologies. What I meant by ramp up is today, let's say you have 8 SMT lines. And let's work that each SMT line can easily do 20 per DCA, which means your current 8 machines can give you 160. So out of 160 today, what kind of production schedules you have from whatever clients you have signed?
Sorry, can you just repeat the last part?
So your total, let's say, revenue capacity of SMT line is 160 crores, and you have signed up certain customers. So what kind of production schedules do you already have for the SMT lines from the customers?
Okay, so
go ahead.
Okay, so today we are working or operating on a 1.5 shift, as we call. So from a customer production schedule ramp up standpoint, we can ramp up to a second shift and the third shift as well. The 8 SMT lines that are in place are catering to 4 lines catering to the export business and 4 lines to the domestic. In terms of the production mix, we have a high mix, medium volume business model. So we are able to cater to diverse business requirements. Some of these are long-term projects which have been signed up for the entire year. Some of these are quarterly demands, and some of them are back-to-back businesses due to the nature of the business or nature of the product. In terms of the projects that we have as of today that we are doing, the current lines that we have are more than adequate to serve these. And if there is a ramp up and additional business that we are targeting, we should be able to easily manage the demand or growth within the capacity that we have built up.
And Mr. Ankur, I would like to add one more thing from finance point of view, that we have sufficient fund for adding more machines to enhancement for our production capabilities. And we have 40 odd crores we kept from IPO fund in FDR, and whenever it will be required, we will deploy that fund for procurement of new machineries. As and when it will be required, we will try to buy the high-end technology machines that we are buying in trenches.
Manishji, the incentive which we got from government, 22 odd crores, how is that accounted for in financial year 26?
Uh, yeah. So you are asking from accounting point of view or
Yes,
utilization
sir.
of the, yeah. So for incentive we received, we are treating it as deferred revenue, deferred income, which is as per accounting policy. So what we are doing, we are from the portion from the date of procurement of machinery to till the date of receipt of incentive, we are treating as income for this year. So we are considering and calculating on the basis of useful life of machine, which are basically for 15 years. So over the next 15 years, we will show that in parts as other income for the subsidiary company. So if you say we had shown some portion this year, 2 point some odd crores and 1.6 crores from the further new years, for the next years.
So there's 7 crores of other income will continue, right? That's what this quarter, this half was visible.
So in other incomes, we have the interest income also, because we have kept our money in IPO, whatever the unutilized fund from IPO fund, we are keeping in the bank in the form of FDR, and we are getting the interest from that money. So we are showing that interest as other income, and that portion we are also including at other income on consolidated portion.
Okay. And Manish, after the merger is approved, just can you give us how many more shares will be issued?
Yes.
Yeah, based on the valuation that has been determined, we will be issuing fresh shares from the listed company to the shareholders of the unlisted company.
So can you help me with the number of shares that will be issued? Ballpark?
So I can tell you the share exchange ratio. So after the merger, SL shall issue 226 equity shares of face value rupees 10 for the equity shareholders of SCPL. SCCL shall issue 55 equity shares for the face value of 10 to the shareholders of Sahasra Skill Development Private Limited. And then we will issue 5 equity shares, face value 10 in the equity shares of IPTL, Info Power Technologies Private Limited.
That's okay. Manish ji, maybe Rutul Bhai can help you, but Rutul Bhai, if you can just give us a total share count issues. Today, there is roughly, let's say, 2.3 or 2. Whatever.
So Ankush, that complete scheme of arrangement amalgamation we have uploaded on NSE exchange, and that is available. You can view from there. And if you need further explanation, you can contact through our IR. We will explain you in detail, because it will take time, and many other investors are also on that queue.
Sure, okay.
Thank you. We'll take our next question from Rohit Balakrishnan of iThought. Rohit,
yeah,
please go ahead.
Yes, sir. Am I audible?
Yes, please.
Yeah, hi, good afternoon. So, sorry, I'm a bit new to your business, so pardon if these questions are naive. So, sir, just wanted to understand your EMS business, which you said you have 2 units, one in Noida and one in Bhiwadi. So, is it the right understanding that Noida is primarily catering to the export market and Bhiwadi is to the domestic market?
Yes, that is correct.
Okay. So, in terms of, so I guess you mentioned that it's about 80% utilization in Noida and about 22%. So, do we do similar kind of products in both these units? And what is the plan to ramp up the utilization in Bhiwadi?
So, the first part of the question. So, when we say similar kind of product units, yes, in terms of the verticals that we serve, whether export or domestic, we serve all these verticals across the geographies. So at both the plants, yes, we are able to cater to a wide variety of demand that I spoke about earlier. And therefore, we also maintain a healthy mix that in case we were to ever have to transfer the business to either of the plants, that can also be managed. The second is that until the year 2024-25, we were primarily an export player. And so consciously, we had developed this a domestic facility catering towards the domestic demand. And therefore, being a relatively new player within the domestic market, we are today at this 20 to 22% utilization. However, we are actively engaging with a lot of domestic customers, and not only domestic customers, even with multinational companies who have set up their subsidiaries for meeting domestic demand of their products. So even though they may be multinational companies who would have had an export requirement, but they also want to cater to the Indian market as the market grows. And so we are catering to their domestic requirements. So the facility in Bhiwadi is a much larger facility. And therefore, at that facility, we will be catering to a lot more volume requirements as well. So in the time to come, we definitely are looking to scale up and be able to increase the utilization. So that will give us better returns on the capital employed.
So how many customers do we have right now in the domestic line? So in the Bhiwadi line across this 22% utilization would be across how many customers roughly?
Well, as of today, we approximately have 110 plus customers in total. I don't have an exact count as we speak on the domestic customers, but it would be in the range of 20 plus customers at least.
So got it. So I mean, is it that we are going to gain wallet share with these 20 customers, or it will be like, I mean, I'm only specifically talking about FY27. Of course, we will have to also get new customers as we move along. But just for the utilization going up for FY27, do you have any kind of visibility that your existing customers will sort of buy more or get involved in newer products for you with you? And what kind of utilization are you projecting for this unit?
So yes, there are both the one is the increasing wallet share with existing customers, which means growing with existing customers through both areas. One is growth of existing solutions that they are offering to us as a manufacturing service from our side, as well as new products that they are developing. So that's one scenario. And the second is obviously adding on new customers so that we can increase or rather widen our base to avoid dependence on any single customer. So that is there. As far as utilization goes, we are targeting that from 22%, we can at least go towards upwards of 40% utilization.
Understood.
I'd just like to add to this that most customers, particularly domestic, because they have to get approvals from their end customers to whichever sector they are serving. So it takes time for certification, for ramping up production from their side. So it takes that much longer to ramp up. So as Varun said, from 22% to about 40%, that is the realistic number that we are looking at. But we can increase both wallet share as well as add new customers. We would constantly be looking at it. Currently, the pipeline for RFQs appears to be quite healthy.
Okay.
And also, sorry, just to add to this point, the facility at Bhiwadi, while there are 4 lines, but these are because the vintage of these lines is very, very recent. And they have been planned in a way that they can, address scalable production. Therefore, these lines have a much higher capacity, and their peak is at least double of 2x of what we can do at the Noida facility. So
Right.
even if we take it to about 40% plus, there'll be a very high incremental growth.
Right. So both these, I think, can do about 300 crores combined, right? I mean, Noida plus Bhiwadi.
Approximately, yes. Yes.
Got it. Got it. And on the semiconductor line, sorry, before that, just one question on the EMS. So just understanding this business, uh, these are long lead, sorry, I mean, how do I put it? I mean, do you have like a long visibility? These are contractually long duration businesses, or they have like, it can change quarter to quarter, who's your big customer in this quarter, it can change who's the big customer in the next quarter. I'm just trying to understand the texture of this business more. I mean, is it short run kind of businesses, or is it like you have a contract for, let's say I'm just random hypothetically saying this, and let's say you're building uh, monitors for a TV manufacturer. So you have like contractually that business will continue to keep going on for whatever time period. Or is it that in this quarter you have like that business, then next quarter you'll have to figure out something else? How does it work? Sorry for this basic question.
No problem. So, in fact, every question challenges us as well. So, I think every question is a good question. So, typically, there are different types of customers. Let me put it this way. The top 5-7 customers that we have long-term engagements with these customers with much longer-term visibility beyond a specific a financial year as well. However, from a visibility standpoint, that visibility is there, but from a contractual signing standpoint, usually the customers, at least that we work with, do not sign beyond 1 year because there are obviously market forces that everybody wants to take advantage of. So let's say the top 5-7 customers, their business is reasonably healthy for us and it's reasonably regular. Yes, there are businesses that we manage, which are what we call back-to-back businesses. But then again, that's the nature of the business where they may not have predictability enough to be able to give long-term contracts. But having said that, our customer retention is to the tune of 90%, and our business repeatability is to the tune of 92%. So we have a healthy, or not really healthy is the wrong word, but we have let's say pretty much visibility into the business scenario of our customers. And we've been working with a lot of them for reasonably long period of years. So based on the historical data and based on quarterly interactions that we have with them, we are able to have enough of predictability into their ordering forecasts that they're going to do with us.
Understood. Very clear. And on the semiconductor business, so I think we are about 15 odd crores, and you're saying that we'll move to 50 this year, 50. So what is that predicated on? And how many customers do we have there in the semiconductor business?
Okay, so answering your first question, let's say a mix of 2-3 reasons. One, the consumer business that we primarily focus on as of right now has a decent enough void because the large brands have shifted their focus towards enterprise business, which is highly profitable, highly demanding, etc. So there's this huge demand in the consumer space, which we are catering to. Number two, due to the geopolitical scenario, a lot of the customers are looking at India as a country because India has got healthy relationship and very neutral to most of the countries across the world. Therefore, we are, and we being perhaps the only player doing memory packaging, we are seeing a lot of demand. The third is that so far within this quarter that we are going to end in, starting from next month, we might be as close to clocking whatever we did in the last 12 months. So based on this, we are reasonably confident of being able to achieve the guidance that we've given.
Got it. And just to understand one more thing, so you mentioned that X of the subsidiary that is getting merged, we can do about 210 to 15 crores. Let's say 2 years out, I mean, I'm keeping that subsidiary out for a minute because that can, I mean, the timelines can be a bit here and there, which is not in your control. But this business, which is there in the listed entity today, whatever 200 to 15 crores, do you see that sort of reaching to 300 crores on its own, let's say, FY28?
Yeah, if you keep the standalone, if you keep out the entities that are going to merge, if you keep them out by FY27, we are our guidance is anywhere between 250, let's say 210 to 220 crores. So by FY28, we will definitely be looking at the range of 300 crores.
Okay. And that subsidiary which is there, what is the, like, at 85, 90 crores that you are expected to do, what is the kind of utilization at which that is working? Or is
that it's not a subsidiary, it's a separate company.
Sorry. Yeah.
Yeah, it's a separate company. So there the utilization percentages are to the tune of 85 to 90%. And that is primarily for the reason that actually that happens to be a much older entity. So therefore, the equipment that we have there is older vintage, and therefore the productivity, percentage of that entity is higher. However, in the time to come, maybe even this year, we are planning to have some enhancement over there so that we can increase our throughput and probably be able to serve the same amount of revenue, but on a 60 to 65% capacity utilization. So that way, we'll have more capacity available there as well to be able to cater to export demands.
Got it. No, I think this is very helpful.
Also, that entity, usually we are looking at much higher mix, low volume compared to the listed entity where we do medium mix, medium volume.
Okay. Awesome. No, I think this is very helpful. Probably I'll reach out for a more detailed call as I do more work. But this is very useful. So thank you so much.
Thank you.
Thank you. We'll take our next question from Het Gorecha of Fintura Investments. Het, please go ahead. Yes.
Am I audible?
Yes, please.
Good afternoon. Thank you for the opportunity. So first of all, congratulations to the management on great set of numbers. And I went through the PPT presentation of the company before attending the con call. So yeah, it was very well prepared and it covered all the major operational and financial highlights. So credit to the management for that. I just had a small question. Like, could you please share the company's capex outlook over the next few years, and how you see the free cash flow trajectory evolving going forward?
Mr. Chairman, would you like to answer that?
Yeah. So as our CFO Manish mentioned, that some of our IPO proceeds we have put it as an FD, and that is available for any capital expenditure that maybe envisaged in terms of if there's the significant demand. So we are adequately covered for that. But I would like to make another point here that by and large, over the years, our company has really looked at cash flow as a very important principle behind which we work. So we have always maintained that we should have a strong cash flow or positive situation, and we will continue to do that. Even as of today, we except for the semiconductor company, we do not have any long-term borrowings, and even the working capital borrowings are significantly lower than what we have got approvals for. So we would continue to look at our strong cash flow principles, that we should be have a very strong positive cash flow.
Okay, sir. Thank you.
Thank you so much. We are taking a next question from Paras Chheda of Purple Vertex. It should be a follow-up question. Paras, please go ahead.
Yeah. Sir, on this cash flow from operations bit, I wasn't clear on that. So for the last 2 years, on a consolidated basis, our cash flow from operations have been negative. So when can we expect, this cash flow from operations to turn positive, whether it would be FY27, 28?
Mr. Paras, I would like to answer your question. So because of the need of business and revenue has been grown, so some of our customers are paying delayed. Even we have accumulated inventories also, like it is the need of business to accumulate the inventory of at least 2 to 3 months. So business is scaling up, and we are hoping that it will improve in coming years. So by the end of next year, we are hoping that it will be positive.
So by FY28, we are saying we could turn positive.
Yeah, we are expecting this.
Yeah, definitely. So I would also like to mention here, as Manish said, 2 points. One is to gain newer customers, particularly for domestic sector. We have invested in a higher inventory so that we can cater to their long-term requirements. There's because of uncertainties due to geopolitical tensions, sometimes getting the right components may be a challenge. So therefore, we've had a long-term contract with our vendors. So that has resulted in a lot of cash being put into inventory. So that's one part. And secondly, sometimes we may have, particularly in the semiconductor business, we've had to, looking at the market conditions, we've had more inventory so that we can cater to, if there is shortage in the market, we would be able to cater to some of our European customers very quickly and effectively, and be able to take the benefit of price rise, as we've seen in the last 3-4 months. So that has actually resulted in the cash flow being what it is right now.
Right. So if the inventory is disruption led, the rise in the inventory, probably that could be temporary. But if you're planning a structural business model itself, whereby the inventory is structurally high to take advantage of opportunities, that means the working capital tie-up will always be there broadly. So I'm just trying to understand, because we would like to grow some 3 or 4x in terms of revenue from here as well. And then the funding will have to come either externally from debt or equity. So, I mean, that was the only perspective.
Yeah, we will definitely, remain open to all the, various options that are available, whether it is from debt or whether it is from any other source. If we have to look at, if the demand is very healthy and positive, and we need to get finances from other sources other than the conventional sources, we would be open to that.
Okay. But for let's say 28 or onwards.
Oh, we can't hear you.
No, I was saying that for FY28 and onwards, can we sort of expect for cash flow to be, CFO to turn positive? Because at some point it has to sustainably turn positive.
Sorry, Mr. Chheda.
The last sentence, kind of your volume went low.
What I was saying is that, for FY28 and onwards, can we expect the cash flow from operations to turn positive maybe? Because at some point, in terms of the sustainability of the business model, we need to turn or work upon that.
Yeah, Mr. Chheda, it's our respected chairman mentioned, because after the poor performance of FY25, We try to retain new customers. That's why we have given some longer credit period. Now the customers are sustainable. We are improving on our credit terms, as well as one good point is like we received the specs incentive in our semiconductor company. So that fund will also help to improve our working capital working capital cash flow. So that's why, considering all the factors, we believe that we will be positive by the end of 528.
Understood. Just one of the other queries is, sir, how many active semiconductor customers do we have currently onboarded or qualified?
So
We have
as
a total-
we have a total.
Thank you, Mr. Chairman. We have a total of approximately 24 to 25 active customers, big and small put together, at the semiconductor operation.
Understood. Understood. And sir, I mean, in general, while of course our aspirations will be quite high, my understanding is that the memory prices are on a roll, for quite some time now. Are we benefiting on that, significantly? And I mean, when do we expect sort of the 600, 700 crores kind of a peak, revenue to be achieved, whether possibly in the next 3 years or would it take beyond that?
So the memory demand is currently, yes, on a roll. The memory industry is extremely volatile, so prices, keep on going north, south, depending upon how the demand is and what the market can accept. As we speak, actually, at this point of time, the pricing in the consumer segment has actually gone down to a large extent. But we continue to maintain healthy demand. Therefore, we are able to, be able to do healthy business. With respect to growing the business, it's a mix of three things. One, we are continuing to invest in systems and processes so that we can have benefits from our operations. So that's one. The second is that while we're seeing the demand being consistent and healthy, we're also trying to increase our customer base. But the third is that while the prices have increased, whenever the prices increase on both ends. If it's at the front end with customers, they also increase at the back end with suppliers. So the supply chain management, the management of inventory, which was already spoken about by our CFO and our chairman, that maintenance of inventory and stock is very crucial in the memory business. And how do you manage and liquidate that stock? The last but not the least is that we will continue to invest in engineering and R&D services so that we can have better control over our supply chain through our own solutions rather than depending upon partner solutions. That will help the long-term sustainability and profitability.
Right. So, I mean, in terms of just as a thought process, in terms of the vision now, in terms of peak revenue, do we expect that to hit like within 3 years or so, or would it take beyond that, maybe with the current foreseeable business trends that we see?
Let me answer that, Varun. When you say peak revenue, are you looking at
both the EMS as well as the semiconductor units, to sort of reach the 600 crores that we were talking about as a capacity, optimal capacity utilization?
Well, definitely we are looking at FY29, we would have reached that figure. I would also put it a little differently. As we go forward, even beyond 29, what we would like to see is that about 65 to 70% of our revenue comes from our EMS business. And about 30 to 35% of our business comes from semiconductors. So that we are not completely dependent only on EMS. Semiconductor is a growing segment. As a matter of fact, earlier today when I met the Minister of Electronics and IT, he was saying that the demand for semiconductors in the country would go up to about $150 billion from a current level of $30 billion. So there's a 5x demand growth. Now, so we would want to be we would like to get a share. Now, how do we, as Varun rightly mentioned, how do we protect ourselves from the vagaries of high price of raw materials or inputs, is to do focus on engineering. So that's how I said that we would definitely be applying for ISM 2.0 and get into advanced packaging so that our value add from the business increases, and therefore our risk towards supply chain is that much reduced.
Understood, sir. And so just, last query in my end now, a little bit basic in nature, whilst because I was also, a small-time investor with Imtron and Sirma SGS. From your industry perspective, how does our business model compare generally in terms of products line to both of these, Imtron and Sirma SGS?
Okay, so Varun, I'll answer that. If you look at Intron and Sirma SGS, they are growing primarily their EMS business. What we have chosen to do is, we consider ourselves as a technology company, and therefore we have, invested significantly in the semiconductor business. Now, it's known worldwide that semiconductor business is a highly capital intensive business, and therefore you don't get returns immediately as you get in an EMS business. However, the long-term benefits of semiconductor industry will far outweigh the conventional EMS business, and therefore you see that even our historical background, being a technology company, we have always looked at high margin businesses, and semiconductor definitely over time would be a high margin business.
Understood. Just a follow-up on this one, sir. In terms of your vision with respect to now that you said semiconductor business itself, now what parts of the value chain do you want to sort of focus on within the semiconductor space? That it's a huge sector. Whether OSAT, ATMP, chip fabrication is a different league, etc. So, what's your vision with respect to this business then?
So, our core focus will be on the ATMP side, because when you talk about an OSAT business model, the customers that you engage with, let's be clear that every OSAT customer that one engages with is already doing business with some packaging company or with some OSAT. So there are standards and benchmarks that have already been put in place. And therefore, to be able to achieve those benchmarks and standards, one has to be able to prove your track record. So that becomes very difficult because obviously, packaging was not done in India prior to this. With the ATMP model that we are pursuing, and primarily in the memory segment, it's not that we will not look at the OSAT at all, but we will, once we tend to stabilize, mature our existing systems, processes, engineering capabilities, and be able to widen our product processing portfolio, then the approach towards OSATs becomes a much stronger bet, because then they have seen that we would have a good enough track record, we'll have enough of experience, and the ecosystem developed in terms of the supply chain and supply chain materials. So the approach towards them becomes a slightly different approach with a lot of experience in place.
Right. So, the last query I answered that, Chairman sir mentioned that with respect to our business model, we would like to move towards a little bit the semiconductor business compared to the EMS in general. When we spoke about Imtron and Sirma SGS, my question was the attraction towards this semiconductor business in terms of ATMP, where we want to focus on. The reason for that, is it the market opportunity potential relative to the EMS? Is it the healthy margins, volume business? What is the crux that is driving us towards focusing on this ATMP business?
So I'll just correct that.
Because this is a long gestation, business also, is my understanding. As far as I understand.
Yeah. So I'll like to clarify on that statement. It's not that Mr. Chairman is saying that we do not want to focus on EMS. For us, EMS is a lot more legacy. We've been in this space for the last 25 years. And we have, systems in place. We have senior management in place. In fact, we've just onboarded another business unit head to manage the overall Bhiwadi operation. So we have a lot more management depth to that particular business, which can be driven by the overall management team. On the semiconductor side, there will be a lot more core management focus, given its impact on the overall business that we have, and also given the impact that it can have for India as a country. So at the top management level, there will be a little bit more focus towards the semiconductor business, given the long gestational period that we have to sow the right seeds today. As I just spoke about, putting in the engineering team in place, being able to develop solutions within the country, those are the areas that we will focus on.
So just, to basically cut my query into a single liner, why not, and just therefore to seek the answer that I'm seeking is, why not just allocate all the capital resources which are also deployed in the semiconductor business towards the EMS business itself, which has been a legacy business, our strength, etc. Why diversification towards semiconductor? Where we know that this is a long gestation business, working capital requirement will always be there, etc. It will take time to grow this business compared to the legacy business strength that we already have.
Yeah, but we are not saying that we are not, focusing. We are, going away from EMS. As I said earlier, almost 65 to 70% of our revenue, even in 29, would be from EMS. But semiconductor provides new opportunity. There is a huge demand growth. There is, also from a security perspective, the country should have its own semiconductor ecosystem, and we want to be a part of that. Being a technology company, we would want to have a better value add through engineering efforts. So how does one grow? You should also have to mitigate your risk in the legacy businesses as you go along. And that is the reason why we have gone into semiconductors.
Yeah, and lastly, Mr. Chheda, I think we all bear the responsibility of also trying to ensure that the future of all the Indians depends upon India for itself to be sustainable and to be, in the words of our Prime Minister, Atmanirbhar. If we continue to depend on external support in the hardware and manufacturing space, while we see today the world is bipolar, we don't want to just keep on being stuck in between. So we'll have to create, and when I say we, it is all the entrepreneurs in the country should create capabilities to be able to have all products being manufactured within the country itself. Now, I know everything is not always possible. There will be different parts of the supply chain that will get developed in other parts of the world. But if we can, develop some of the key areas of operation here, we should be able to do that. So I think we bear that responsibility as well.
Understood. Thank you so much. Best of luck for that. Hope we grow. This is upcoming opportunity. If we can tab it well, this one is quite a steep opportunity potentially, with only that little bit with the gestation period that we'll have to sort of take in the stride.
Yes. Thank you very much.
Thank you so much. We are taking a next question from an individual investor, Manan Jariwala. Mr. Manan, please go ahead with your question now. Yes, please go ahead.
I had a question regarding the unlisted companies that we are merging. So in the previous con call, we had mentioned that regarding the Sahasra Electronics, which is the EMS entity, that we are expecting to do around 100 crores of revenue in this year. and the PCB company was expected to do around 20 crores. So in total, 120 crores of revenue in FY26. So, like, how much actual revenue have we done in this year? And the second part is, why have we downgraded the guidance? Like, you mentioned that we are expected to do around 90 crores from new entities in FY27.
So we did about crores last year, I think, right? 97 crores. And we will do about the same next year. As Varun mentioned, we are there, we do high mix, low volume business in that non-listed entity. We will continue to do the same. I mean, 90 to 95 crores, depending on depending on the exchange rate, etc. As far as the other unlisted company, Infopower, is concerned, for the PCBs, we are expecting to do about 24 crores this year. In FY27, we did about 16 last year. But as we merge, some of the related party transactions will disappear. So that's why Varun mentioned that it will come down to 90 crores.
Okay.
So, for example, let me give you an example. From our semiconductor entity, we were supplying to that unlisted company, because the unlisted company was certified by Amazon for semiconductor products. So what we were doing last year was that we were supplying from semiconductors to the unlisted company, and they were supplying to Amazon. Now, once the merger takes place, that will disappear. So the related party transaction would eliminate that delta that was coming.
Yeah, that makes sense. Thank you. I'll join back the queue.
Thank you so much. Due to paucity of time, ladies and gentlemen, we will take that as the last question for today. I will now hand it over back to the management for their closing remarks. Over to you, management team.
Varun, why don't
Yes.
you go ahead?
Yes. Thank you very much, Ratul Bhai and your team, for supporting us on this investor call today. I'd also like to thank all the stakeholders involved with us, our shareholders, our employees, our customers, suppliers, as well as the government for supporting our initiatives. FY25 was a turbulent year for us. However, we have put in, when I say we, the entire team of Sahasra has put in a lot of effort to get back on track. And FY26 is a better year for us. We will continue to put in the same effort to sustain and grow as we go along. There are challenges, as we see globally. However, we are well poised to be able to mitigate those challenges, and therefore, the guidance that we have given, we will stick to that in the time to come. And yes, the semiconductor operation will definitely take some extra focus of the management, but that is to help the long gestation period actually come out with the right outcome. We have invested heavily at the EMS operation as well. So from an investment standpoint, barring few technology-related investments, I don't think we will be investing heavily in the equipment space, probably within the space of engineering and testing capability enhancement. Other than there are a few large contracts that we are working on. If those fructify, then yes, we may have to scale up and therefore invest further. As of the start of the first quarter, we seem to be on track. So once again, thank you to everyone who have been on this call. And thank you to my colleagues, and thank you to our chairman as well.
Thank you so much. On behalf of Sahasra Electronic Solutions Limited, this concludes today's conference call. Thank you all for joining us, and you can now click on the leave icon to exit the meeting. Thank you all for your participation.